Hey, what's up traders? This is Jay from swimtrading.com, aka Swim Trader. Welcome to another episode of Weekly Market Analysis. What a week it has been since the last week, where you can see there is a G20 trade war truce between Donald Trump and President Xi Jinping that resulted in a gap up on Monday. And then after that, you can see it was an indecision session followed by two bullish follow-up before the July 4th Independence Day. So what happened after that was that market on Friday took some profit taking, and as well as you can see some of the buying pressure coming on towards the later of the session, and all this took part during the close, where the market rallied towards the close. So this is a sign of bullishness, and if it were to continue for this coming week, then I will be looking at some pretty good upside for this week. So right now, as we are looking at the market, tomorrow there is nothing on the horizon. On Tuesday, we have the speech, the Fed speak, and then on Wednesday, we have the testimony, and on Thursday, we have the meeting minutes as well as the part 2 of the testimony. So when it comes to called data centric, well, definitely US dollar is going to be affected. Definitely the equity market will be affected when the FOMC meeting minutes is announced. So currently they are looking at interest rate cut. So there are speculation of a 25 basis point cut. And right now, well, the market has already priced this in. However, if the Fed doesn't cut this, right? If the Fed doesn't cut this, then we may see the market go sideways, if not maybe having a knee-jerk reaction downwards if it doesn't cut. So if it cuts, then definitely it is going to rally upwards towards the resistance and the key levels that we are going to discuss this week. All right, so this is going to be a day, or rather a week, that I would say swing trading it's not going to be that good because of a news-centric week. So usually when the news are so focused and all the heavyweight news, where you have the meeting minutes, you have the Fed speak, you have the testimony, everything in a week, I tend to do no swing trades during the week, and I prefer to move into a shorter time frame to do day trading. All right, so let us first look at the key levels that we can use as a guide for this week. So as you can see, the market, ever since it climbed back out in June after a very nasty May. So this is one of the worst May in for the last 5 to 10 years, because as you can see, it dropped about 5%, or in fact more than 5%, I think somewhere around 7%. Then in June, suddenly on the first day of June, you see that this is the bottom, and then everything begins to pick up. So the initial first week of June, we see a very, very bullish start that is around 5.3% gain. Then subsequently, well, this goes up and then it goes into a sideways consolidation. And as the continuation happens, prices made about 2.8% gain. So then came the next correction, or the pullback, which is this time a flag pattern, as you can see, then a breakout again. So this time, as you can see, from the base of it, it is around 2.8% again. So I subscribe to this theory called P1 equals to P2. So where P1, which is the first part of the price before the consolidation, usually the magnitude of it is equivalent to the magnitude thereafter, which is also known as P2. So if you subscribe to this theory as well, then you would have known that this is almost there. And besides that, S&P 500 is around 3,000 points, and 3,000 being a whole number always will come in as a key resistance. All right, so besides that apart, let us first look at what are the key levels that we can look at. So let me delete away that. And if it goes up, all right, so if the market goes up, and if I were to drag this down, if the market goes up, you can see that last month's R2 and this month's R1 coincides. This is around 3030. So this is the upside that I have for this coming week if the market goes up. So if the market decides to break up above, and then does a retest, slowly inch forward like this. So this is my upside target. All right. So where's my downside target? My downside target remains that it is going to retest this area over here, which is around 2960 to 2950 zone. And this zone remains as the previous resistance, and so far it has only gapped above but have not come back and do a retest. So between these two scenarios, between the 3030, which is scenario number 1, or 2960, which is scenario number 2, I would say there is a good 50-50 chance. And why I say that, because it's all dependent on what Thursday the FOMC meeting minutes will be. If let's say there is a surprise rates cut, which is in line with what the market are speculating, then yes, we may be looking at a 3030 upside for the coming week. However, if let's say there is no rate cuts, and depending on the testimony, if the message isn't good, then I'm looking at a retest, not so much at 2960, but more so towards where my trend line is, which is around 2970 for the coming week. So intraday as well, I will be looking at these key levels, 2970, and of course the round number of 3000, and this is for S&P 500. Now, let's go over to Europe and look at the Germany 30. Or rather the DAX futures. The DAX has always been in a, how do I put it, lagging as compared to the US counterparts. But however, you can see that it is reacting nicely to the trend lines that I have plotted. And where are the upside pertaining to this week? Well, you can see that last time prices went above the trend line, and then after that it came down, and this time it gapped above again, and then for the whole week, it was above the trend line and then does a retest. So the upside for this week remains at R1 over here, which is just around 12700. So 12700 level. This is something that I will look forward to in DAX this week if it goes up. If it comes down, it is likely to test out this range, which is around 12400 to 12500. So these are the two key areas that you need to take note of for DAX futures this week. And let's go on to the next market, which is oil. Oil is at a very nice place in a sense, right? You can see it does, this is a downtrend. So you can see that this is a downtrend like this. So if you plot the trend line across, you can see that it broke out of the trend line and then now does a retest. But however, the downtrend over here, the steeper one thing that I'm looking at more so is that the swing counts. All right. So what do I mean by the swing counts? You have a swing high, then a swing low, swing high, swing low, swing high, swing low, and then after that double bottom, then finally swing high, swing low. So this is a swing low, and then this was the last swing high. And what you have here is a higher high, and then now a higher low. So this is a sign that a trend is changing. So it goes from a downtrend over here in the first part, and looks like now it is going back up on an uptrend. So up to where? Now that's the million-dollar question, isn't it? So as far as I'm concerned, I would think that the pivot level 56 area is going to hold, which coincides with my trend line. So this zone, if you were to do a long swing, you can get in somewhere there at a pullback price. I think it will be a very good price. And then where should you get out? The first resistance should be somewhere around here, which is around $59. So this one should be your long swing TP1, and then your R1 will be your long swing TP2. So in the coming week, right, I personally do not think that we may hit TP2. However, bounce up of TP1, it is more probable. So I'll be looking at around the $59 level for the coming week, and provided that the pivot level will hold. So how do we know whether a pivot level will hold? One thing I can share with you is watch for a false break to the downside and then a reverse. Okay, so once you have this false break, a reverse happen, that's where you can take your entry in this area and then long swing it to your TP1. So this is something that I have for you on oil. Now let's go and look at gold. So gold has been kind of stuck in a consolidation zone ever since it did a breakout. You see, this is a very nice breakout of the 1280 that level, and then after that does a rise up, and then after that pull back, continue again, which the movement signifies something looks like it looks something like Bitcoin, and then it does a complex pullback like this. So in a complex pullback like this, right, this means this is no longer a clear-cut uptrending market, because in an uptrending market, right, you are supposed to see a simple pullback like this, or rather you prefer to see a simple pullback like this with very clearly defined swing point. But however, right now the market has gone into a complex pullback, of which you can see the swing point is no longer that well, how do I put it, that straightforward. You have a swing high and then a swing low and then a swing high again, so it looks like it's stuck in a box. So one thing about about gold is that I'll be paying attention to this level, which is 1430, because this is a sign of sellers that are coming in, that buyers are not willing to accept a price for now that is above 1430. So unable to do that with the withdrawal of the fear in the market, because previous week there was this talk on Iran, this talk where Iran shot down US drone, and then Donald Trump go and tweet back and say Iran is going to pay a high price for it. So right now the fear is no longer in the market. So where will it go? Will it go up or down? Well, if you're in for just a speculative swing trade, which is just a few days, I would think that a reasonable price point to get in will be around the pivot level, which is around 1390. And again, where do I swing it to? This is my level 1. So this is my TP1. And for this week, I don't bother looking at the R1, because R1 is way above. So R1 is way above there, and I don't think you're going to hit it in 5 days. Unless Donald Trump tweets about, I don't know, the nuclear football? I don't know. So he can tweet about anything that he wants. So where would I get in? Where would be the favorable price point to get in? Ideally, I would want to see a breakdown first, and then after that a reverse. I want to get in somewhere around 1390 to 1395. That's where I'll be looking to get in and swinging it long to the TP. And this one, the TP number 1 is here, TP number 2 is up there where the resistance is. So TP2 is too common, or rather it is too obvious. So I will think that before the price even get there, maybe somewhere around 1420, the price may start to turn already. So you can consider setting a TP2 there. So if it goes up. So on the other hand, if it comes down, then I will be looking at a turning point or a stoppage somewhere near 1360, 1370, which was the previous month's R3. Okay, so this is where I'll be looking at how the prices to stop dropping if it comes down. If it goes up, limited upside, we are looking at 1420, 1430, this price zone as your TP. That's also be sure to get in at a good price. Never chase the price, alright? So this is what I have for you across the major markets, and for this week I have decided to throw in something extra, which is a pair of currency that I'm currently looking at and looking for a long swing on this currency, which is AUD CAD. So let me zoom this out, right, and you can see for the last 6 years, this price zone over here, price zone over here, price zone here again, and right now AUD CAD is down here at this price zone that it was for the past 6 years. And of course we can see a downtrend line like this denoted by the blue color line. And why this week I do think that AUD CAD is going to bounce, so let me zoom it in, is because of this. So let us give a reference to the Australian dollar futures. Well, since you can see AUD CAD, AUD is the front currency. So if AUD strengthen, okay, so if the AUD strengthen, this whole pair AC is going to go up. So on the other hand, if your AUD weakens, then the whole pair AC, assuming Canadian stays the same, okay, then AC is going to come down. So let's look at what the Australian dollar futures is going to do. So you can see that the futures has found a bottom 1, a bottom 2, and I like this bottom 2 because this is a wash out of all the entries over here. So you can see this one, there is a false break to the downside before it comes back. So on the larger scale, we are looking at a double bottom. So this one is your bottom 1, and then this one is your bottom 2. And right now, again, if you count the swings, right, this one is your swing low. So this one is your swing low, this one is your swing high. Then after that, you have that is almost the same low, and then now you have a higher high. So this goes to show, right, the Australian dollar futures are kind of having strength right now, and it is looking to rally and climb itself out of the glut. So it has been for the last few months. So where is it going to go to? Well, immediate upside I'm looking at is somewhere around this R1 area. And for this upside to continue, okay, I want to see the pivot on the futures hold. So if this happens, okay, if this holds, then AUD/CAD, given that it is at a very favorable historical price point over here, I would think that AUD/CAD, you see, bottom 1, bottom 2, I'm watching for a break that is lower than this, and then after that, a reversal. Where to? This is my immediate target, just short of 0.92, and then my TP2 is at the pivot level. So this is just a short bounce. I'm not expecting this to happen, okay? Not this. I'm just expecting a very short bounce, and you are aiming somewhere between 60 to 100 pips for this coming week. So this is on AUD/CAD. I've thought of this side. I've thought of the sharing this with all of you, my viewers, because this is a potential trade that I'm gunning for in this coming week. Okay, so this week we have covered all the key levels of S&P 500 futures, Germany 30 futures, talk about oil futures, gold futures, and then another currency pair, AUD/CAD, which is the one that I'm gunning for in the coming week. All right, so trade safe, guys. I wish you have a pleasant week ahead. Remember that this week it is a very data heavy week, so stay tuned to all this news. If you're doing day trading, then avoid or at least watch out for all the timing that this news are going to be released. All right, so that's all I have for you for this week. And if you have any queries, just send a WhatsApp to me, or send an email to me, buzz me over on Facebook and things like that. All right, you know how to reach me. All right, so this is what I have, and I will catch you again next week. Goodbye.